Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Carson here with a breakdown of the action in today's session. And it is Tuesday, September 12th. Almost forgot the date there, Ed, but who could forget the kind of market action that we saw today? It's been a topsy-turvy kind of market as of late around key levels.
Yeah, we keep on moving around the 50-day line, went back below it on some of these things. So want to take a look at Apple, which is not looking great, but definitely was key for today. Also want to take a look at GE and Nextracker.
Well, let's do it. But first, let's take a look at those major indexes. Today, the Nasdaq down 1%, followed by the S&P 500 down 0.6%. The Dow was slightly negative on the day, and it looks like the Russell 2000 closed essentially flat on the session. So one day after the Nasdaq was able to squeak back above the 50-day line, hit resistance kind of around there. You know, it wasn't a decisive move above the 50-day line by any means, and now back below that level. So it seems like that key moving average remains a battleground.
Yeah, and we're not decisively below it either, though. We're down more of it than we were above it. There were some sort of strange things why it bumped up yesterday, and there was Oracle earnings last night, and Oracle's not NASDAQ linked, but it still has an influence on all those tech companies. We had Apple today. We had the CPI report. There's not really a reason why people should been getting too excited with yesterday's action, and shouldn't get too depressed either here. We're sort of in a range. We're still around the 50-day line. When that really breaks, certainly on the downside, if we go below that downside and close below it, that would be really negative. I don't know if we need to go all the way up to the high of the range to feel better, but you probably want to get pretty close to it. You want to be getting about 14,000, I think, and holding that. And until then, you sort of just have to be an open mind and not get stuck into a bearish or bullish mindset. And probably not do a whole lot in terms of new buys while this is going on.
Right. And making incremental decisions with exposure in terms of maybe scaling back or adding, even though, like you said, it doesn't seem like there's a whole lot, but it could only take a couple days for new setups to develop. So best case scenario, we do see that, but best to let the market and those stocks prove themselves rather than trying to anticipate. Okay, let's move on and take a look at the S&P 500. Ed, seems like a similar story here.
Like very similar, just smaller scale on the moves, and that's pretty much it. Again, decisive move either way. Would be, it really could tell the tale here. There's all sorts of downward sloping, upward sloping, sideways, all sorts of things you can look at, and we need to move above the 50-day line to get more excited, and we just haven't done that yet.
Yeah, and here's a look at the Dow, which hit resistance at the 50-day line today. Let's also take a look at small caps here, Ed. Still hovering right around that 200-day line. We'll have to see if that remains a support level, but would really like to see it start picking up momentum again. It's quite a ways below the 50-day line, more than 3%.
Yeah, sort of this week's breadth hasn't been terrible. Today was bad, a little negative. Yesterday was a little positive, but just like the small caps, it didn't make up. It's not making up for last week's negativity, that regard.
And here's a look at the 10-year yield. We look at this pretty much every day, coming off a little bit, but kind of hovering in a recent area and still pretty close to the highs from this year reached in mid to late August.
Yeah, I mean, this looks a fair amount like the stock indexes, honestly, with sort of forming a handle, sort of in these ranges. Whichever way this breaks, you might see the rest of the market, the stock market, break the other way.
And a few quick ETFs to check in on. Here's a look at XLE, which tracks the energy sector. A nice day of outperformance, up 2.3% with some volume. So it seems like a little bit of volatility coming into this as of late. Yesterday's decline down 1.3%, up 2.3% today. But hey, it's up. It's to the upside. So a little bit of volatility here and still trading above that 10-day line doesn't seem like it would shake out too many traders who got in at the right time.
Yeah, and it's been riding the been riding the 21-day line for basically 2 months plus. This is sort of the one area where you could have been like successfully adding and not having real trouble, all in all. But a lot of them are extended now. That's one thing. So you might need to be watching this sector, looking for chances to get into or add to positions.
Mm-hmm. And quick check-in on software and chips. So with the disappointing Oracle reaction, IGV down 2.9%. And we had been saying it was so notable how this sector was holding up really, really well, taking a bit of a hit today. So money flowing out of this area, but all is not lost just yet. Maybe we just need some of these stocks to consolidate for a little bit and form handles.
Yeah, that could be what we get. And Adobe earnings will be interesting Thursday night. Sort of raises the stakes for Adobe, that you wouldn't want to see that one have negative results. But yeah, this one has performed very well. So while today's drop wasn't fun, it's really acting pretty well.
Yeah, let's see if we can hold that 21-day or the 50-day if there is a further deterioration there, but a lot depends on Adobe, as you said. And here's a look at SMH, which tracks the chips, down about 0.8% today and stuck below that 50-day line for now.
Yeah, see, this did not get above the 50-day line, and you'd like to see that come back, to really feel better about even just a tech rally, let alone a broader rally. So need to see that. It's not, again, not all is not lost. It's just in the middle of this range. One good day and we are above the 50-day line. It's just that we're not seeing a lot of big flashing green lights right now with the market.
Mm-hmm. I mean, this sector had a really nice move along with the software from about mid-May to mid to late July. So taking a bit of a rest here, but we'll have to see, like you said, if it breaks one way or another. And now let's take a look at some stocks. Here's a look at Apple, which had its iPhone 15 event today with some other announcements as well, down 1.8% in an uptick in volume. It's still holding in a base here. Talk about a strong and steady move earlier in the year. Apple really was just on a nice climb, but this current base structure, Ed, isn't too pretty.
No, it isn't. There's a few things. One, the volume is picked up, and there's a lot of negative bars there. The relative strength line, well, okay, the stock hasn't hit a new low, but the RS line, that's a 6-month low. That's been trending lower, so that is not been doing well lately. And you just look at the fundamentals. It's like you're not going to be as forgiving. You might see where's the upside on this. Why would you? If the technicals aren't looking good, and now you look at those fundamentals, they're just not amazing. I'm not, it's not terrible, but there's no growth here. So there just seemed like even among large cap, slow growth companies, there's better looking charts and better looking fundamentals than Apple right now. And this was a weight on the Dow, S&P, and Nasdaq today for sure, and last week.
Yeah, makes a ton of sense there, Ed. Next on the list, let's take a look at GE. Nice RS line, blue dot on this weekly chart here. So far for the week, 2 sessions in, it's on pace for a nearly 3% gain. Taking a closer look at the daily chart, it did come in a bit by sessions closed right around 115, just shy of early entries here. So flirting with an early entry within this really tight and orderly flat base.
Yeah, you probably could have bought it if you had a downward sloping trend line, or just use the bounce off the 50-day line. Though at this point, if you haven't bought it now, it seems like, well, you might as well just wait for that, 85 cents. You're not exactly waiting too long at that point. This is nice action. It's the first base since January. We've been talking about it lately. Really tight action here in general. The RS line at a new high. Another thing is this one is benefiting almost certainly from RTX. RTX, which has the Pratt & Whitney unit, its jet engines, they're going to have to take a bunch offline. It's going to be very expensive. So, I don't know if it'll really help GE's jet engine business over time. It certainly seems to be helping the GE in that regard because RTX has been in meltdown. And I think that's probably one reason why GE has had a pretty decent week here so far. You can see how badly that is. And even the drop a couple months before that was related to the jet engine issue. So when your main rival is struggling, that's really good news, especially as GE is moving towards becoming a pure play in aerospace. It's always great when your rival is having a little bit of trouble there.
Yeah, exactly. And last on the list, let's take a look at NXT. This is Nextracker, a young name in the energy solar group, working on a new base here. And it does seem like after today, Ed, this is a proper handle here.
Yeah, I think so. Or, it might be one more day because I guess is that 1, 2, 3. Oh, no, that is 5. So for me, I thought I had counted it earlier. And wait a second, why am I getting, why is it not counting out? Come on, I can count to 5, can't I? Let's see here.
Maybe it's
so it's got that downward
on the
slope.
weekly.
It was already there on a weekly, and it seems to be trading relatively tightly. This base is not too bad for a recent IPO, and especially given some of the volatility in the market. The downside is that solar stocks have been doing terrible. Some of that's on the residential side when you're looking at an end phase or a sun run. And Array Technologies, that one's looking pretty good. That one's a little more volatile, but that's in a similar space. They both have sort of tracking ground control systems, sort of move the panels with the sun to maximize the benefits. But Ray's had some more volatility. Nextracker seems oddly enough to be relatively, nice looking base. And it's not as far away from its 50-day line. Definitely it's one to watch. But yeah, the group is not doing well, but the growth is really strong on this one as well.
Mm-hmm. And it looks like we're not going to have earnings be an issue for this one for a little while because we got the last report in late July. So I'm not sure if this is the exact earnings date here in the bottom, late November, but doesn't seem like we're going to get earnings for the next little while at least. But 45 seems like the next potential resistance level to keep an eye out for, Ed.
Yeah, and the high energy prices for oil is probably, and lifting other things, that's probably a benefit for solar. Just it makes solar stocks look good in comparison. And so that's probably something that's also lifting up Nextracker.
Great. Thank you, Ed. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live for all the details on that. We will see you there, and we'll also see you right back here tomorrow at the close.